Welcome to Investero. Learning investing from scratch may seem intimidating, but with the right approach, anyone can build a solid foundation and grow wealth over time. The first step is understanding the basic concept of investing. Investing simply means putting your money into assets that have the potential to grow in value or generate income. These assets can be stocks, bonds, real estate, mutual funds, or even small businesses. Unlike saving, where money just sits in a bank account, investing allows your money to work for you and compound over time. The second step is identifying your goals. Ask yourself why you want to invest. Are you building wealth for retirement, saving for a house, or just trying to grow your money faster than inflation? Having clear goals helps you decide what type of investments fit your situation. For example, if you're investing for retirement decades away, you can afford to take more risks and focus on growth stocks. If you need money in just a few years, safer investments like bonds or index funds might be better. Next, you need to learn about risk. Every investment carries some level of risk, which is the possibility of losing money. Stocks can go up and down quickly. Bonds are more stable, but offer lower returns. And real estate requires larger amounts of money and management. The key is to match your risk tolerance with your goals. Young investors often have more time to recover from losses, so they can afford riskier investments, while someone closer to retirement might prefer safer options. A great way to start learning is by understanding the stock market. Stocks represent ownership in companies, and when businesses grow, so does your investment. Beginners often start with index funds or exchange-traded funds, which are collections of stocks bundled together. Instead of betting on one company, you're spreading your investment across many, lowering your risk. ETFs that track the S&P 500, for example, give you exposure to 500 of the biggest companies in the US with just one purchase. Another important step is opening an investment account. Today, online brokers like Fidelity, Vanguard, Robinhood, or Schwab make it easy to set up accounts with no minimums and low fees. Once you open an account and deposit money, you can start buying assets that align with your goals. Many platforms also offer educational tools, simulators, and research to help beginners understand their options. As you learn, focus on building habits rather than chasing quick wins. Consistency is more important than timing the market. One powerful strategy is dollar cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This approach takes the emotion out of investing and smooths out the impact of volatility. You should also understand diversification, which means spreading your money across different types of investments. If one stock or sector performs badly, others may perform well, balancing your overall portfolio. A mix of stocks, bonds, and perhaps real estate or commodities gives you more stability over the long run. Learning investing from scratch also means avoiding common mistakes. Don't chase hype or get rich quick promises. Don't invest money you can't afford to lose, and don't panic when markets go down. Every investor faces ups and downs, but those who stay disciplined and think long-term usually succeed. Finally, never stop learning. Read books, follow trusted financial news sources, listen to podcasts, or take free courses online. The more you understand how money, businesses, and markets work, the better your decisions will be. Investing is a lifelong journey, and the earlier you start, the more time your money has to grow. Starting from scratch might feel overwhelming, but by taking small steps, staying consistent, focusing on long-term growth, anyone can become a confident investor. Subscribe to Investero